Welcome to SectorExchange.com. I'm Jim Farish, founder and editor. As we've been going through this Learn How To series, we're going to get into this part, which is entry, exit, and target. And realistically, when you get down to the crux of the matter, when it comes to trading and or investing, these are the three pieces that everybody has to deal with. Unfortunately, a lot of times traders and investors use only two parts, which is the entry and the exit. And we leave out the stop or the escape plan. And I've taught about this. I wish I could count how many times we've taught on this over the years. But one of the things that we talk about is scan the market, watch the market, play the market, and what we mean by that is what we were talking about in the sector rotation and the sector watch component of this. And that is you scan the market looking for opportunities, you build a watch list, and from the watch list, you define the entry point, the exit point, and the target, which is the risk-reward relationship prior to the entry process so that you can then decide whether or not you want to own it. And the last piece is the target. So you scan, watch, play, entry, exit, target. Those are 6 of 10 rules that we've developed for trading that we've been using for a very long time. And they work. They work because they're simple, first and foremost. They work also because it forces you as an investor / trader to decide. You have to decide if this is the right position based on your own psychology for where you're going with your money. So what I want to do is I want to actually put this into play. I want to look at how this works. And when we go here, you can see here the entry exit target is the one we're looking at. So I want to go and look at real quickly the model pages, which we talked about in one of the other videos. We explained how the models were built, how they work, and how they're derived. But you can see right here we've got Bank of America. And so since we have Bank of America, let's pull up a chart. And we'll pull up the chart and we'll type in here BAC. And what we're looking at for Bank of America is a break above this resistance line. It takes out all of this congestion downside. You can say, why didn't you buy it over here? Well, not saying that we didn't. What I'm saying is we're looking at it right now. Where is the opportunity within Bank of America? And it's a break above this resistance line. So if it follows through on the upside, doesn't mean if it consolidates all that in here, that's wonderful. That's all the better, in fact, if it does do that. But from the standpoint of looking at how the trade would develop is what happens if it breaks above that level. In other words, how are we going to get into the trade? And the rationale behind this is you can see all of this consolidation in here, even though we've had a move from 550-ish up to 730-ish, that's a big move in the stock. And what I look at is the fundamental underlying components of the stock at the point that we're recording this, I think they're improving. The balance sheet's improving. A lot of things happening with Bank of America. But bottom line is we're looking for a breakout above resistance without getting into all that on this video. So the entry is defined right there. So we're going to take this and we're going to come over here and we're going to define this as the entry point that we want to own this position. So there's the entry, is the actual break above that point right there. So we're looking for it to break above that point and give us a point that we can get into the position, make these colors so we can see them. And there we have it. So there's our breakout. Then the second part of this is where do we think it's going? And so our belief, in other words, I'm going to keep using that theme. What I believe is going to happen is Bank of America will continue. Even if it consolidates here for the next 2 or 3 weeks, I'm still looking for it to follow through and break to the upside. So that's my belief in Bank of America. My entry is right there at $7.40. And then what I'm looking for is the target. In other words, where do I think it's going to go? And if we look at the next resistance point off of the breakout, the clear resistance would be up in here. There's still going to be some in this gap, that gap. So we got resistance all the way up. But I think we could actually work our way through that resistance and set the target up here at $8.60. So what we do is we go back to this and we say, all right, now I want my target here, and my target is $8.60, and we'll put that on the chart right here. And now we have it where we got the entry, We got the target. The question is, what if it flunks? What if what if it flunks out of school? What I believe to be true isn't validated by the market. In other words, it doesn't work out. Where do I want to get out if I get into the trade? Now, if it breaks down before I get into it, I don't have to worry about it. What I have to worry about is once I get into the trade, how does that work? And we get into the trade. If it breaks above here, we take the entry at 740. Then what we want is our stop to be back here around $7.25-ish in the event that the trade invalidates itself. So let's just pull it down. Actually, right here is where I'd like to see it. So let's put it, come up there, $7.12, and that becomes our stop. And we go in here and we'll type in STOP, and there's our stop. Now, we've got our entry, our stop, and our target all drawn on the chart so that we can follow along. And I highly recommend that you do this with your own portfolios, and you can build them. You know, you can come inside. We use, this is TC2000, which I've said before, is I could come in here and say, all right, I can build right here. And this is just part of the reason that we use certain software is the ability to do certain things that we can't do other places. And so I want to pull this over, and I want to add, I don't want to add that. I want to add a position, and I want to add Bank of America to this. And it shows that I just added it down here. If I scroll down, it should show up. If I type in here, it's going to highlight it. I'm just using this software. This isn't actually on our website, so I'm just showing you how we would track this. So we show that we own it. And this is why I use this type of software, is that I've got drawn on my chart, my stop, my entry, my target. I've got it inside of here, how I'm going to get into it. I can track everything very simply by just following through on what I'm looking at on a day-to-day basis. And that's, I think you've got to find tools that work for you. And this is just is a software tool, but it's a tool that works for me. I'm not saying go out and buy the software, but you can get Warden software, but this is just a simple way. A lot of these you can do within the trading software that you use, whatever you're trading on E-Trade or wherever. But the focus is, how do I get into the position? How do I get out of the position? And where am I going? Entry, exit, target. So there it is. It's pretty simple. It's pretty easy to follow along. And when it's posted to the website, you can see over here that it's going to tell you what's the entry, what's the stop, and what's the target. And we look at the allocation by size. You can go to the charts and decide whether or not you're comfortable with that. Some people are going to look at this stock, look at this video, and go, that guy is absolutely insane. I would never buy that stock after that run up. And that's okay. I mean, the thing that's amazing to me is we feel like we have to be right, and if we disagree with somebody, they're not good at what they do. That's not the way it works. I mean, I disagree. I mean, we've had a lot of presidents of the United States that I disagree with. I still live here. I still pay my taxes, and I still do what I need to do to be a citizen of the United States. And you say, well, trading is different. No, it's not. Everybody's got opinions. And how I know that is for every buyer, everybody who buys a stock, on the other side of it is a seller. And both of them think the other is crazy. And that's the way the market works. That's why I call it a pool of neurotics who are all trying to trade together and with their own belief systems. I'm here to provide research. I'm not here to say I got it all figured out. I'm here to say that I'm probably one of the few people you'd ever talk to on a day-to-day basis that says, look, the market is a group of raging neurotics looking for a wreck. And they generally will create one. And if I can build in systems that create discipline for me as an investor, I'm going to be better off. And I think that's really the key of what this whole website was built around, is simple rules that we built for trading. You can build your own rules. We're giving you the research based on what we see and how we see it and how we would play it. Now, the other part of this with entry, exit, and target is that as this approaches the target, what do? We can either sell it. In other words, we hit the target, sell it, or we can raise our stops to be tight and let it run, sell half, let the other half run and manage to stop on it. But you have to make a decision. And that's what we do. And when we get to the targets, we will make decisions based on what we deem to be appropriate at that point in time. And if we went back to the sector rotator model, as an example, as we hit stops, we will highlight those on the table here. And so if the target of 58.50 was hit, that would be dark green, and it would say that we've hit the target. It would also tell you at that day why we're holding it. In other words, we're going to hold it for XYZ. We think it's moving to this position. It's accelerating. RSI is doing this. MACD is doing a double Lindy with a backflip, and I like it, and so we're going to follow it to the upside. So we always let you know exactly what's going on relative to being against the targets, over the targets, or under the targets, or around the stops or not, and we adjust our stops up or down. Sometimes things will happen. A good example is ONN. This is a good teaching tool just for today. As I'm recording this happened this morning. And one of the things that we don't like are gaps. And if our stops are out there and you see a support line, which happens to be, in this case, the 200-day moving average, if we go and look at the intraday chart of this, you can see on the intraday chart that ONN gapped down in that first 5-minute bar. If we change that to a 1-minute bar, you can see by scrolling this backwards, it came down, and guess where it went? It went to 8.59. So it went 1 penny below the stop, took us out, and then off to the races it went. The difference of that is that you can see the markets pre-market. You can see where the spread is on ONN going into the trading day. If it's near your stop, take the stop off and let it trade out, and then put your stop back on. And you can see as it went back up on the day, you can put your stop back in at 860, and you're still in it at 888. That's stop management. That's just using, tools that are available to you. They have some trading systems allow you to not have your trade on at the open. You can turn the stop off. Even though it's still an order out there, it turns the stop off and then allows you to turn the stop back on without having to re-enter the trade. Use the tools that are out there available to you in the different platforms to do that. So entry, exit, and target really is about the discipline. And we have a lot of discipline things that we teach within the website on a daily basis, which is learning how to trade. It's learning how to manage your money. That's what it's all about. So I think that's one of the big pluses, if you will, to the website, is that we give you the education to go with the trades. It's not just here, trade it. Good luck. See ya. We're available. You can email us at info at sectorexchange.com at any point in the process. As a matter of fact, if you go up here, you can see contact us. You just click on contact us. It's going to bring up an email that you can send. And you send the email to us, and we're going to reply to it. If you're panicking and about to fall out of bed with worry and sweat on your brow, there's an 800 number there, 800-369-5759. You call it. We'll answer the question. We're here. This is what we do on a day-to-day basis. We can answer your questions. We're here to help. We're not here to dictate. We're not here to say we are the Holy Grail. We're here as a tool, and that's the best way I can describe it. We're a tool, and we're a tool that allows you to have research and a reference point of somebody who's doing this professionally on a day-to-day basis that's here to help. So with that, I hope that you'll take advantage of Sector Exchange. I think it's a great site, not just because I produce it and our company puts it out on a day-to-day basis. I think it's a usable, flexible tool that teaches traders how to trade.